Ladies and gentlemen, we'll be back from that short break. My name is Anthony Sebale. We are bringing you financial markets. Now, I promised I'll be bringing a very special guest with me this morning, and he's already here. This is Mr. Andrew Mwima, a trading and research fellow at Uganda Securities Exchange. Now, the Uganda Securities Exchange is a body, like I said, that lists those companies and gives you all the current pricings and so on. And now he's here to throw more light and tell us more about this exchange. You're most welcome, Mr. Mwima.
Thank you, Anthony, and good morning, viewers.
Yes, so now, to start with, what is Uganda Security Exchange? To a lay Ugandan out there, what is Uganda Security Exchange?
Thank you, Anthony. Good morning once again. The Uganda Securities Exchange is a stock market that brings together different buyers and sellers of financial instruments. Just like you notice, market, it means that there's something which is tradable. So other than somebody running to Nakawa and Owino, you can actually look for these financial instruments at stock exchanges. So there is a strong resemblance to these markets which ordinary people are used to. Instruments may include shares. A share is also called a stock. Corporate bonds, which are simply loans by companies or corporate institutions. Then we have treasury bills, treasury bonds. In other advanced markets, you're actually able to buy commodities as well. Commodities like oil, like gold, sugar, coffee, beans on these markets, as well as currencies, which people, I believe, have a similar pattern.
Okay.
Yes.
So, okay, now talk to us about the history of the Uganda Security Exchange. When was it begun, and what was the main objective of initiating this program?
Yeah, the stock exchange in Uganda was established in 1996. It evolved out of the Capital Markets Authority. Of course, they created the Capital Markets Act, established the regulator first, which is a CMA, and the stock exchange. The main role why it was established, if you had your ears to the ground in the late 1990s and early 2000s, the government had to liberalize, to divest certain former state-owned enterprises.
Privatization.
Yes, exactly.
Parastatus and so on.
Yes. Privatization. To be specific, if you recall companies like Uganda Electricity Board, Uganda Commercial Bank, National Insurance, New Vision. Now, as the government was trying to sell out its stake in these state-owned enterprises, it needed a market where these institutions would be sold. So that gave the background. So once that was done, the UEB of those days is the Umeme we see today. There is, of course, a story between that, but it's the Umeme we see today. So government sold its shares to a number of private investors who also exited through the stock exchange. So Actis sold its stake, which it had got from the government. It's the Umeme we see today. So Uganda Commercial Bank as well, the government sold its stake to Stanbic. Stanbic eventually sold some of its shares at the USE. Same story with National Insurance as well as New Vision. So it's a market that was created, one, to assist the government privatize and divest, but also to help private companies, even the government as well, to raise capital, because we started with the Capital Markets Authority. So government is a large borrower domestically, so to do so it needed that market where it can sell treasury bills and bonds. So that is the capital markets and the eventual stock exchange.
So you're saying in actual sense it was actually as a result of government requiring these companies that have just been set up to raise capital, so they could actually have a starting point. Now, take us through the listed companies then and now, and how the security exchange has grown through this period of time.
Okay, thank you, Anthony. The stock exchange has been in existence for almost 25 years. And we have 18 companies which are listed, which is not bad. Which, it's not very good, but not bad either. Meaning, on average, we have had about one company listing every 15 months, thereabout. You look at other markets like Kenya, they have about 8, but these were markets which were started in the 1950s. The Johannesburg Stock Exchange has over 300 companies, but it was started in the early 19s. So not so bad. Of course, the biggest hindrance why we have a few is because many people are not aware about what the capital markets and the stock exchange does in the first place. But that aside, the 18 companies, we have 10 local companies and 8 cross-listed companies. A cross-listed means that it's primarily listed in Kenya or in another country and also listed in Uganda. But then we have 10 local companies as well.
Can you mention some of those companies so that people out there can actually relate?
So we have BAT, that is British American Tobacco. We have Bank of Baroda. We have Centum. We have DFCU. We have Equity Bank. We have East African Breweries, Jubilee Holdings, which is Jubilee Insurance. Kenyan Airways, New Vision, Stanbic, Umeme, KCB, Quality Chemicals, and of course very recently MTN. In addition to many others.
Okay, so now having walked through the companies that are there and knowing the fact that Ugandans have not yet embraced the capital markets and investment in these bonds and stocks, why do you think Ugandans should actually wake up and start investing in shares and bonds?
Thank you very much, Anthony. Now, these shares and bonds are a sub-component of what we call financial market instruments. Most ordinary Ugandans have that perspective that when I get some money or some money, I will buy land, I will
build rentals,
invest in cows, invest in goats and chicken. But remember, some of these assets which we are used to either need huge cash outlays even before you start. To set up a rental, for example, in Ntinda, in Chiwature, Nigeria, to get the land alone, you will most likely need 100 million plus. To put up the structure, you may need another 200 million. So that's a lot of money which you may not have at one given time. Even to mobilize it may not be easy. But to invest in shares, to invest in treasury bills and bonds with as little as 100,000 shillings, 50,000, 20,000, you're actually able to start. We shall start with a share. A share is simply a unit of ownership in a company. According to our law, if you're able to afford one share, you can start. The share price of NIC, for example, is at 6 Uganda shillings. Meaning if Anthony has maybe 5,000 shillings, those are almost 500 shares of NIC. So with that, you simply register with us at the stock exchange. We align you with a stockbroker. You give that broker the money and they buy for you.
Oh, so you don't first go to the broker. You have to first go to the Uganda Securities Exchange to get you a broker?
Either way. You
Okay,
can start with the broker, but many times people don't know. And you need that confidence that I'm going to a trusted intermediary to trade on my behalf. So once that is done, you've registered, you get the broker, deposit with them that 20,000, then they buy for you. But what would you benefit when you buy shares, for example? When you buy shares, you're becoming a part owner in MTN, in Uganda Clays, in Quality Chemicals. When they declare a profit at the end of the year or even half year, they will pay you part of that profit through what we call a dividend.
Yes.
So as you're waiting for that salary, or if you're a businessman and you're waiting for income from a deal, you have this passive income which is coming to you through what we call a dividend. Shares appreciate in value like land, so you can buy when the price is low, sell when it is high. People who invested in BAT, for example, at a certain time, shares were as low as 500 shillings, but they reached a high of 30,000, meaning your money would have grown exponentially, enormously if you may. Like I mentioned, the startup you need to invest in shares is very, very low. Just calculate, if you don't need $1 million, you don't need hundreds of millions, 20,000 is good enough. Then you get a chance to own companies you're not able to start on your own. You may have a dream of starting a bank, but all you need is simply buy shares in Stanbic, DFCU, Baroda. The prices are already low, but already you get that indirect ownership in these businesses. Think I can go on. Then these shares are assets. You may want to borrow from a bank, but you don't want to mortgage your house. You don't need to put your car as collateral. Shares are accepted as security to access credit from these institutions. You have that child. We have just started sending children to school today, and you're looking for a way you can save for them 20, 15 years from now. You can buy shares for those little children. By the time they are old enough to join university, you sell them off and pay tuition.
I have a question right there. Now, you're talking about 15, 20 years. Now, as I know, Ugandans out there, we really want quick results. And sometimes people want something they can actually liquidate as fast as possible. How can I have the assurance that this money I'm investing in shares and stocks will actually come out at the end of this period of time? And are there short-term options where I can earn much quicker? Because honestly, telling someone to wait for 25, 15 years might be a hard nut to crack.
Yes. Absolutely, Anthony. And Ugandans, we have that, maybe it's a disease in our mindset. We like quick returns. That is why many Ponzi schemes and these other maybe not so good ventures find a lot of fertile ground in our economy or country. Yes, rightly put, the markets are open Monday to Friday throughout the year. And it's not that when you buy shares in MTN, for example, we do not restrict you to hold them for 5 years, 10 years, 15 years. If you buy that share at 180 and 3 months down the road you notice that it has appreciated to 300, you can easily exit. You can instruct your broker to sell for you, even after a week, even after 2 weeks, as long as you notice that actually my money has grown. Remember, you're buying a commodity. Put your shoes in like a farmer from Chivale who has brought 10,000 tons of maize to the market in April, maybe at 100 shillings a kilo. 1 month down the road it appreciates to 300. So you can do the same mindset, sell off, nobody will stop you. So you sell off, get whatever you've earned.
Exactly. This morning I saw Umeme, last evening, before the market closed. The prices went up by about 0.49 something. So what you're saying is literally I could buy the shares today, and as this rate goes up, I sell at a higher price.
Absolutely.
Just the day after.
Absolutely.
And I get my money.
Yes, and you get your money.
Wow.
Yes.
Yes, I think we can continue with those examples.
Just there are other secondary benefits when you invest in shares. This one I think may be of interest to the business community. It's an excellent avenue of building wealth. I believe we might speak about it also, but if you're to look to some of the wealthiest men and women in the world today as we speak, the Jeff Bezos, I think of recent Elon Musk,
yes.
Bill Gates, Warren Bentley, but surprisingly, most of them are heavily aligned with the stock exchange. Either they start their businesses, float their shares on the stock exchange somewhere, or some of them, like Warren Buffett.
Maybe you can explain floating, because people now want to get used to these terms on the show.
Floating simply means that they sell their shares in their businesses on a stock exchange somewhere. I think almost most of them that we know are Americans.
Yes.
Yeah. Jeff Bezos is a founder of Amazon. So it's listed on the New York Stock Exchange. Very recently, Elon Musk, founder of Tesla, is, I think, in the recent weeks, he bought off Twitter, took it private.
Yes.
Then Warren Buffett, the proprietor of Berkshire Hathaway, which is a hedge fund whose sole benefit is to buy shares in other companies.
Yes.
Yeah. So these people, for the businessmen, you start your business, sell some of it at the stock exchange, not 100%. As these businesses grow, because like land businesses grow with the economies, your net worth as a businessman or proprietor also grows when your company is listed on the stock exchange.
So when we see the net worth of, for example, Elon Musk, that net worth is not in terms of just the physical tangible assets.
Absolutely.
We might find it actually has more of these shares in other companies, more than his own.
Absolutely.
Okay.
And just like you put it, we have just come out of the lockdown.
Yes.
Now, though it was bad for many, but shares in companies like Netflix, Amazon itself, and most of these companies which are in these online related businesses, Zoom, appreciated in value, outperforming companies like Ford and General Motors. Now the owners or founders in these businesses, every time the share price in your company increases in value, your net worth grows. Remember, you don't sell 100% of your business, but a stake.
Yes.
Now, when the price of your business appreciates because of some reason in the world or in the economy, your net worth grows. So people actually build wealth through the stock exchange. I hope you've appreciated it.
I do.
But there are many out there who may be a little bit conservative, like Warren Buffett. You don't like to be so active in businesses, but you can buy shares in Stanbic, buy shares in BFCU, Meme, MTN. As these economies grow and businesses grow, the many of them, even on the Nairobi Stock Exchange, you discover that where you bought at 25, it's now at 40. Where you bought at 100, it's now at 500. So those many shares you own in different companies also appreciate and help you grow your wealth and net worth as an investor. Yes, I think those are the major benefits investing in shares.
Yes. So we are going to go into a short break, but before we go, I would like to know if the Securities Exchange has a package for the small and medium enterprises, because as you're talking these big companies like in the US with Amazon, and even the listed ones here in Uganda. We see Stanbic Bank, we see DFCU, companies that have been here for quite a while. Is there a chance for companies that are just startups or companies that are building their capacity that want to get capital to come and get listed on the Security Exchange?
Absolutely, Anthony. The stock exchange has different segments. When we speak about borrowing, if you recall, we started with the treasury bills and corporate bonds. A company that wants to borrow is not limited or restricted to going to banks only to borrow. So the banks will give you loans. The stock exchange and capital markets will give you a loan which we call a bond. Yes, a bond. So government, we call it a treasury bill, treasury bond. Companies, we call it a commercial paper or corporate bond. When we speak about selling shares, a company that is very large, like MTN, Airtel, Stanbic, floats its shares on what we call the main investment market segment. But for a startup, Sebale and Sons, there are so many in Uganda. I don't know whether you have examples, but there are so many startups and small and medium-sized companies in our country. Those ones can sell shares on what we call the growth enterprise market segment. So these large established companies go to the main board, main segment. Startups and SMEs go to the growth enterprise market segment. In fact, smaller companies go to what we call the specialist segment, where they even go through some incubation and eventually.
So specialist segment. So dear viewers, we're going to be right back. We are still with Mr. Andrew Mwima, a traders and research expert from Uganda Securities Exchange, throwing light here and there on shares and bonds and all these cool things, which we are about to give you insight into. Don't go away, we'll be right back.